just want to miss and not write down. So, I definitely recommend y'all have your pen and pad. And really just lock in. And I'm about to go ahead and get this thing going right now, waiting for this to finish loading on the live stream. And then we could go ahead and lock in. All right, so if y'all ready to go ahead and if y'all ready for this train to go ahead and get going, go ahead and drop a one in the chat box below. Let me know that you're locked in. Let me know that you're ready. All right, cool, cool, cool. I'm seeing the ones, and everybody that's dropping the one, I hope you one of the individuals that got the pen and pad and ready to take notes as well. So big shout out to all of you guys for plugging in on this lovely Thursday. So as you guys seen from the flyer, this training is going to be pretty much our all-in-one in-depth trading training. This is not going to be like us looking at the charts, specifically just overviewing anything. It is Thursday, and honestly, I don't really have too much going on later on in the night. So tonight, I might even do a pop-up, right? Y'all are the only ones to hear it. Tonight, I might do a pop up where we hop on the harmonic scanner together and look for some trade ideas. But that's only going to be available for those who hop on within the first 5 minutes. I'm going to be locking it and we're going to lock in. I don't know when I'm going to drop the link. So definitely just make sure you pay attention to the chat later on tonight. But I'm going to go ahead and start sharing my screen. We have a lot of new members within the community. So I definitely want to give a major shout out to them. And honestly, I want you guys to understand for the structure of our community, we have the educational platform with the Go Live educators that does all of the strategy trainings, that does all of the in-depth, every single currency, they're overviewing it and letting you know what it's about to do for the week when you hop on those Stevenson Lindor trainings. So, with these, trading calls, if it's not like a harmonic scanner overview, my focus is just to give the basic understanding to the newer people coming in so that plugging into the academy and plugging into the source of Go Live is a lot more easier and more clear for them. So this training call, like I said, is going to be an all-in-one in-depth training, just going over the basics of everything trading so that you guys have clarity, to start just taking action and taking the proper action to getting results in the market and everything else as well. So if you guys can't see my screen in full effect, go ahead and drop some twos in the chat box below. Let me know that y'all seeing it and let me know that we good to go. We good to go. See one two, see a couple of twos. All right, the twos flowing in. Okay, perfect. So let's go ahead and get right into it, you guys. So the first thing I want to talk about is what is the foreign exchange market, right? Some of you guys, like I said, you might be been here a month, 2 months, 3 months, and you like, Josh, why are we starting here? Because I just got somebody started yesterday. There are people getting started every single day. So the foreign exchange market is a global, decentralized, or over-the-counter market for the trading of currencies. This market determines foreign exchange rates for every currency, and it includes all aspects of buying, selling, or exchanging the currencies at current or determined prices. Meaning that, let's see if I got my props with me today. Actually, where's my book? Let me do an example for y'all real quick. If I got it, I don't know where it's at. Okay, it's right. Boom. Right. So for those that don't really understand what it is that we're doing as traders, right? Each and every single country has their own currency, right? Have their own economy and their own currency. This is 20 euros right here, right? This is, don't ask me why I got one, but it's a $2 US bill, right? Then also right here, I have 20 pesos. And I never even been to Mexico. I sold some shoes to somebody back in what 2015, 2016. And I wanted extra cash on top. And he was like, I don't have any extra cash. I'm like, well, just give me something. He was like, I got a peso. I was like, I'll take it. So I had this peso ever since then. But 20 pesos, 20 euros, right? Each country has their own currency. And when you're traveling to these different countries or you're exchanging goods and services between these different countries, the currencies have to be exchanged. Meaning that if I'm in Europe, I can't spend this peso, right? When I'm in Europe, when I'm in Mexico, I can't spend this euro. So the currency has to be exchanged. And for every single exchange, there is a rate, right? So 20 euros might be worth 80 pesos. I'm not sure, right? I'm just jotting out numbers. So 20 euros might be worth 80 pesos. So in order to get these 20 pesos, or y'all get what I'm saying, you got to exchange it. There's an exchange rate. So that's what we do as investors trading within the market, but we just do this digitally from our phone. Before, as I talk about all the time in the opportunity cost, this wasn't really something that was available to average people that didn't have millions and billions of dollars or banks or hedge funds. So I believe that we are all very blessed to be able to trade within the world's largest financial market. So now, what is Sway Charts? You know, for all of those new members who started going through the new member videos and setting up this account, setting up that account, Sway Charts is an electronic trading platform that is widely used by online retail foreign exchange traders, where they actually can analyze the markets as well as enter trade ideas, right? So when I say that, I don't know why it says trades in one place. So you can pretty much take those trades and analyze the trades in one place. So you have the ability to look at the market, you got the ability to enter the market, all of that using Sway Charts. And so that is the platform that we personally use. When I first got started, it was MetaTrader 4. Then our broker went over to MetaTrader 5. We was using MetaTrader 5, and then all of that extra stuff happened with MetaTrader 5, to where the safest bet for a lot of US traders is to use Sway Charts. And so let's go ahead and proceed forward. Now, when it comes down to Sway Charts is actually the same. This is connected to the broker Sway Markets. So a broker is simply a financial service company that provides traders access to a platform for buying and selling foreign currencies. So for the broker, they're pretty much like the middleman of the exchange. You living in the United States, being on your phone, they are the ones that are turning those euros and, you know, making the profit of the exchange rates happen for you. So we as a community, we use Sway Markets simply because it is an all-around safe broker that we've been using for years for the past new investors, and we haven't really had any problems. And any problem has been taken care of immediately because of their fast support. Fast withdrawals is also a big thing with Sway Markets. Before, when I first got into trading, I remember my first withdrawal, it took like 2 days for me to get it. And then after that, it was an average of like a day and a half for every withdrawal that I was making. And then it was even sometimes when I switched over to binary and I started trading binary options, every withdrawal, they wanted me to re-verify my identity over and over and over. And that would take 3 days. But now with Sway Markets and us trading using Sway Charts, you're able to literally get your withdrawal. Every withdrawal that I've gotten in the past 3 months have came within 5 minutes. Like, I'm not lying, like 5 minutes. And I look at it, be like, notification, withdraw approved. And then I look at my Coinbase, the money is there. So imagine how effective and efficient that could be for you. I used to tell people all the time, like, you know, before I leave the house, I would make money trading and then I'll go spend money. And I would do that, right? If my friends would be like, Josh, let's go out, I literally look at the market, find a trade idea, make some money, and then I'll go out and spend it. But it's even better now because I can make the money, withdraw the money, and spend the money that I just profited within, you know, a very, very fast time frame. So another thing with Sway Markets, you have the ability to trade multiple different assets, whether that's foreign currency pairs, whether that's stocks, crypto, commodities, all of that. And it's also a very low startup cost to actually start trading within the market. But I now want to kind of give you guys like a quick breakdown of how, you know, you make money in the market. There's two ways to make money as a trader in the market, and that's by buying or that's by selling. So when you're trading, you only want to look to buy when you're expecting the market to move up, right? In an upwards direction. So meaning if I'm getting into the market when it's only worth $2, right? I want it to go up to $3, $4 in just, you know, simple terms. I want it to go up, and off of it going up, I'll make money. Or if you sell and it's at $2, you want it to go down to 1, 30 cent, 20 cent, 10 cent, and you're going to make money from the market going down if you sell. All right. So that's just the biggest difference of how we make money as investors trading within the market, buying and selling. And, you know, you buy when it's going up, you sell when it's going down. Very, very simple. Next is market structure. So there's 3 phases of how the market moves. Okay. So the market moves in what we call uptrends, where the market is actually creating higher highs and higher lows, right? Meaning you're looking at the market, it start here, it goes up, it comes down. That low is higher than the previous low. That high is higher than the previous high of the market. So the market is trending up. Think of it like going upstairs, right? Consolidation is when the market doesn't make a big move in the upward or downward direction. It's literally retesting and hitting the same spots back and forth, but not making a big move up, a big move down. So you don't really want to trade in a consolidated market because it's really indecisive to know where it's actually going to go, right? Then you have your downtrending markets. This is when the market is creating lower lows and lower highs, like downward stairs, meaning you start high, you go low. The next high is lower than the previous high, then the lower low, then the next lower high, and then the low. Okay, so there's three phases of the market: the market going up, the market stand consolidating, the market going down. All right, three phases of market structure. Next, the start of making money, you guys. And everything else, like the in-betweens, the details that y'all might be like, oh, well, you know, is he going to explain this? All of it is available within the academy. And then I'm on this call also, I'm going to show you guys a place to go after you complete the academy where you could go to get deeper understanding of the videos. Okay. So next is the start of making money. Drop a $sign in the chat box below if you want to make money as a trader, right? If you want to make money in the markets, drop a $sign in the chat for me. Let me see a whole lot of money in the chat. All right. Okay, I'm seeing the money. I'm seeing it. I'm not seeing enough of it. Y'all don't want to make no money for real. I'm not seeing enough $signs. All right, but don't let me convince y'all to want to get some money. So let's continue. All right. Now let's talk about the process of making money. Everything in terms of making money starts with capital, right? Just like I explained to y'all in the business, the capital that you need is people, not $signs. But now when it comes down to trading, you need the money, just like starting up a salon, starting up another business. You got to put money in to make money out. So the amount of money you start off with as a trader will determine the type of results you should expect to make. Write that down. The amount of money you start off with as a trader will determine the type of results that you should expect to make. Meaning that if I only put $2 into a trading account, I cannot expect to be turning that $200 into 200 or $2 into 2,000. It's not really going to happen. All right. Your account is the money in your trading account. You're using percentages of it to invest. So if I got a $200 account, I'm not risking the whole $200 to flip it. I'm taking percentages of the $200 to compound and grow the account. So if you must start trading right away, this is something you could Google, right? It will literally tell you if you must start trading right away, you can begin with as low as $100. Right, I would personally recommend don't start with anything less than 100 unless you're experienced. Like nowadays, I'd be putting $50 into account, grow it to 200, take out, and I'd be challenging myself to continue to grow that account. Or I got like little accounts where I just throw whatever in there and I just use that money to just make more money of it. Right? Let's just say I bought something, right? So I got multiple bank accounts too. I have a spending bank account. I got a bank account where I really don't touch that money for real. And then I got my business account that I get paid out from the company. So the money that's in my spending bank account, let's say I got $300 just sitting in there and I buy something that's like 250. I'll just take the $50 that's remaining. I'll just throw it in that trading account and I'll grow it. And then I'll put the 50 back in there. Right. So, but if you must starting right away, starting your journey in trading right away, you want to start with at least $100. If you want to start to see a little bit more flexibility and making a little bit more money, I recommend a minimum of 500. But for those who are like, oh, I just joined and I want to learn how to become a full-time trader, I want to make, live my life as a trader without working a job. If you want to start making 9 to 5 competitive income, you need to have at least $5,000 into your trading account. So before you could start expecting $5,000 days, $5,000 weeks, you should have a $5,000 balance. Does that make sense? Drop MS in the chat if that makes sense. Okay? You got to have the capital to get what you want. You want to buy $1 million house, you need $1 million money. You want to make millions as a trader, you need millions at that account before the millions will just come. Right? Granted, some people will get lucky and turn nothing into something. I had somebody that was like, yo, Josh, why you be telling everybody you need $100 to trade with? I started a $10 account and I turned that $10 account into 300. I'm like, okay, how many people do you think can do that? What? Like you over leveraged the $10. How many times did you try the $10 to 300? I did it about 5 times. So you lost 50. You was better off just putting $50 in the account. Right? So capital is very, very important. Next is risk management. Proper risk management is one of the most, if it is the most. Why? Because if you're on a journey to wanting to make more money, and you're not in a position to where you could just lose everything you got right now and still be okay, you should, that's the most important thing, is proper risk management. It is the most important thing when it comes down to something that you want to master and being an investor. Some of you guys are trying to master reading the charts before you master risk management. That's backwards. Some of you guys want to master, this strategy, that strategy, but that's backwards. You must master risk management. When there is no proper risk management, there is no safety. That's like just leaving your bank card on your front porch and just expecting that nobody is going to take it and spend money off of it. Right? Taking trades and not knowing, oh, how much should I even be risking? That's you literally leaving your bank account wide open. You leaving your trading account wide open for the market to take whatever it wants. Right? You don't ever want to be in that position. I've been there before and I learned my lesson too many times. Had an $1,800 loss in 3 minutes. You never have to go through that. It's your fault if you ever go through that. You never have to. Right? Now, when it comes down to lot sizes, lot size is a conversion of currency units that express how much money you are investing into a single trade. I'll repeat that one more time. A lot size is a conversion of currency units that expresses how much money you are putting into a trade. This is another big mistake that I made as a brand new trader. I thought the 1.00 was $1 and it was really 10. I thought the 0.10 was 10 cents and it was really $1. So my first day trading, I lucked up and made $100, but I put in 60 cents and thought I was putting in 6 pennies trading Bitcoin. All right. If I would have lost that trade, I would have lost way more than what I would have wanted with that size account that I had. So breaking it down, when you're trading in Sway charts or when you're trading in MetaTrader and you're putting in the trades, it's going to look like this right here, the volume. Then when it comes down to, okay, how much real dollars is this that I'm putting in? This is the dollar form. So if you take a trade and you put in a 1.00, that's the volume. And what that means is every pip, a pip is simply like a step in the market. Every time the market moves a step, $10 is multiplying. So if you do a 1.00 and the market goes back 50 pips, what is 10 times 50? That's how much money you're going to lose. If it goes forward 50 pips, 10 times 50, that's how much money you're going to make. All right. Next is a 0.10. That is $1 per pip. So if the market goes back 50 pips, $1 times 50, $50. The market goes forward 50 pips, $1 times 50, $50. Right. So it does not matter which way it goes. That's just how the multiplication, that's how the money multiplies. Right. Then the 0.01 is 10 cents. The market moves 50, it's $5. Right? Market moves 50 pips, $5. Why? Because 10 cents times every step that the market took. Nano lot, none of the brokers usually allow you to use a nano lot. Especially, none of the brokers are usually letting you use a nano lot. And if you're using nano lots, I promise you're not going to make a lot of money. Imagine catching 50 pips with a nano lot. That's a penny. That's five. What? That's not even $5, is it? Let me see. Let's do a penny times 50. That's 50 cents. So the market moved 50 pips, you only gonna make 50 cents. Most brokers don't even let you do that. There's no money in that. Right? Now let's talk about how to become a smart trader. Because these are things that you can take notes on even before understanding the charts. And when you finally understand the charts, you have the foundation that you need to use that knowledge of the charts to just start profiting and becoming a profitable trader right away. Like I said, too many people try to jump to the next step and they don't understand step 1 and 2. All right, you got to take it step by step. So how to become a smart trader? This is the process that I follow with my trading plan. I only risk 3 to 5% a day. So the formula is taking your account balance, whatever you have in your trading account, you want to multiply that by 0.03 or 3% if you got the percent symbol on your calculator. And that's going to give you how much you could risk, which is going to equate to 3%. Then you do your account balance. You multiply by the 0.05 or 5%. And that's going to let you know how much money you could risk with that account and 5%. So if it's $100 account, 3% of 100 is $3. 5% of 100 is $5. If I have $100 account, there is no way that I should be losing more than $5 a day. Drop a 5 in the chat box below if that sounds lovely. Okay, Josh. You know, I can't just lose everything when it comes down to trading. If I got $100 account, I can't lose no more than $5. Bet. Perfect. Some of y'all are more advanced than y'all like, but Josh, if I'm only risking $5, I'm probably not gonna make a lot. Guess what you should do? Put more money in your account then. Put more money in your account then. All right. That's what you need to do. If you following your training plan and it's not enough money for you, go put more money in your account. That's the solution. The solution is not risk more money of that small account to the point where you're going to put yourself in danger to lose it all. No, put more money in that account. A $200 account, 3 to 5% is $6 to $10. A $300 account, 3 to 5%, 9 to 15. $400 account, 12 to 20. 500, 15 to 25. As you guys get it, you see. So even if you got a $5,000 account, you should not lose no more than $250 in a day. There are people with $250 accounts and they lose it in a day. Nobody in our community. I'll just say that. Nobody in our community. I have not seen anybody. I haven't blown it. Look, you know what's so crazy? One of my mentors told me, Josh, the things that you do as a leader will always be duplicated, even if your team don't see you doing it. Right? Even if your team don't see you do it, it's always going to be duplicated. So I used to be over leveraging, blowing accounts, all of that, like just trying to get rich overnight. And then my team would be texting me like, Josh, I just blew an account. And I'd be like, dang, oh, really? You know, you got to do better, knowing that I just blew an account the day before. Right? That's just how it was going. And so I haven't blown an account in over 2 years. And I cannot think of the last person that I've enrolled into this company that got started, put money in their account, and was like, yeah, Josh, my account is at zero. I have not seen anybody blow it. I've seen people lose a little bit of money and withdraw everything to pay a bill or something like that. But I have never seen anybody put money into their account and lose every single dollar that was in that account. And I haven't blown an account. Like I said, you guys, I haven't blown an account since 2021. 2021. It's 2024. Right? So let's proceed forward. Now, when it comes down to your weekly goal, this is literally just giving you guys a different example of the trading plan that I already give you guys in the chat. So that chart where you just type in the numbers, that trading plan is to help you make 30% weekly. So if you got $100 account, your weekly goal is $30 because that's 30% of 100. If you got a $200 account, your weekly goal is $60. If you got a $300 account, your weekly goal is 90. So for everybody right now that's expecting to replace their 9-to-5 job, think about right now, what number you see is what you get paid weekly. If you get about 900 to 1,000 a week at your job, you need to have $3,000 to $5,000 in your account. If you're making about $300 to $400, $300 to $500, $300 to $600, whatever, you need to have at least $1,000 to $3,000 in your account to just expect. I'm not saying that certain days we're gonna risk, because this happens. You follow your 3 to 5% risk, and some weeks you will make 40, 50% by following your proper risk management plan. And that's fine. It's okay to make more money, but we don't want, what did I talk about this morning on the morning dedication call? Right? Having a reasonable understanding and a reasonable respect for time. You need to have a reasonable respect and a reasonable desire and a reasonable goal of your account. You should not expect to just turn nothing into something, because I promise you, you're going to fall short every single time. And if that is your expectations coming in, you will never meet your expectations, and it will not work for you. So you got to be realistic about your goals, realistic about your trading plan, realistic about your account and your capital, right? So now, this is this formula to calculating your pips to find your risk or reward, okay? This is how I do it. So if I'm calling out a trade with the harmonic scanner and you guys see the trade idea, step number one, when you're looking at the numbers, the fifth digit and beyond does not matter. I'm going to explain that in a second. You guys are going to see an example. Just take the notes. Step number one, the fifth digit and beyond does not matter. Step number two, line the numbers up and delete. Y'all like, Josh, what numbers? Just take the notes. Line the numbers up and delete top to bottom, from left to right, the numbers that match. Meaning the first set of numbers, if they match, delete them, move on. Next set of numbers match, delete it, move on. If these don't match, stop right there. All right, that's what that means. Step number three, find the difference of the numbers that are left. Okay? Step number 3, find the difference of the numbers that are left. Step number 4, lot size test. Lot size test for you to check your proper risk management. All right. I don't know what that says. Lot size test for to check. So 4, you want to check different lot sizes to see which one you could use to take the trade. Your reward will always be a product of your risk. Right. So you need to focus on your risk before you focus on your reward. So let's do it. So let's say I have an account balance of $500. My max risk is 3 to 5%, which is $15 to $25. If the trade idea that is dropped in the chat is Euro USD for a sale, it does not matter if it's a sell or a buy. None of that matters. Some of y'all are probably already trying to overthink it. None of that matters. All that matters is your entry number and your stop loss number for you to find your risk. Your entry number and your stop loss number for the risk. Your entry and your take profit for your reward. Okay? So step number 1, what was step number 1? Somebody unmute themselves on the call. Let me make sure y'all can. Somebody unmute themselves and read step number 1 to me.
The fifth load, the fifth number, fifth and above number don't matter.
Okay, perfect. So what do I mean by that? Like I said, we're only focusing on our entry and our stop loss. So if the numbers is 1.06356, let's count it out, right? The 5th digit after the decimal does not matter. 1, 2, 3, 4, 5. Guess what we're going to do? We're going to delete the 6 of our entry number. Then we do the same thing for our stop loss. 1, 2, 3, 4, 5. We delete the 0. So now, right, I'm deleting the 6. I'm going to delete the 0 from my entry and my stop loss. That's step 1. That's the first thing that you do when you get the signal. This is for Forex pairs, not indices, not crypto. For Forex pairs, when you get the signal, this is what you do first. You get your entry number, you get your stop loss number, and you do step 1. You delete the 5th digit. If it's only 4 digits, you don't have to delete anything. Okay? If it's only 4 digits, you don't have to delete anything. And then sometimes on a harmonic scanner, it'll be 6, 7 digits after. 5th digit and beyond does not matter. Right? Drop a 1 in the chat at first if step 1 makes sense. If step 1 makes sense, go ahead and drop a 1 in the chat. If you have a question, drop a 3. Okay. Seems like everybody's getting it. Now let's move on to step 2. Step 2. Somebody reads, tell me what to do in step 2. Unmute yourself and let me know. Someone different. I'm waiting on y'all.
Delete any of the same numbers.
What about the numbers that are before the decimal? Do those count? No. You only count the numbers after the decimal. Okay, but what did you just say? I'm sorry. You said do what? Whoever unmuted themselves?
Delete any of the same numbers.
Okay.
From left to right?
From left to right. Okay. Did you answer the first question?
Yes, I did, Josh. I won't answer anymore.
Okay. Who is this? Let me see. What's your name?
Alice.
Alice? Okay, Alice. Text me on Telegram. I'm gonna do a one-on-one with you, a harmonic scanner one-on-one.
Got you, Josh. Thank you.
But don't answer any more questions after this, okay? So
yeah.
She told us step number 2. She told us step number 2 is to delete the like numbers from left to right, from top and bottom. So we lined the numbers up. We got 1, 1, 6, 3, 5, 1, 0, 6, 6, 5, right? So what are we doing? We're playing a matching game. We delete the 1s. Why? Because they match up. We delete the 0s. Why? Because they match up. We delete the 6s. Why? Because they match up. 6 and 3 does not match. We leave it the same. So on each set, our entry number and our stop loss number, I don't know which is which. It does not matter. our entry number and our stop loss number, we're going to delete the 1.06 from both of them because they both match up, right? Somebody unmute themselves and tell me what is step 3.
Find the difference between the numbers that are left. So you do from the bottom number, it'll be the 65 minus the 35, and you'll get 30.
Perfect. Perfect. So now, after I deleted these in step 2, these are the numbers I have left, 35 and 65. Even if you do 35 subtracted by 65, the negative don't matter. So all you're looking for is the answer, the number. The negative, positive, that does not matter, right? So you do 35, 65, 65, 35, whatever. You subtract it. You're going to get an answer of 30. What does that mean? That means from the time of the entry to the stop loss, the risk is 30 pips. You're risking 30 pips. So step 4, now I know this is a 30 pip risk for this trade idea. I know that with a $500 account, the most I should lose is $15 to $25. We're now going to test a couple of different lot sizes to see what's the largest lot size we can use. And the answer to that is a 0.08, which is 80 cents in dollar form. So now what I do is I take my 80 cents and I multiply by my 30 pips. And what does that give me? $24. So if I'm to take this trade now, kindly let me join the harmonic scanner. I know y'all gotta unmute yourselves. I'm sorry. Y'all gotta earn these 101s. I'm sorry. All right. I gotta earn the 101s. Answer these questions and let's all participate. But Lala, you gotta earn the 101. Sit down. but so now, right? Before I even take this trade, if you got a $500 account, let me know if you are comfortable with risking $25, 24, right? If you got a $500 account, let me know.
We can't risk it.
No, just let me know in the chat. Yes or no? Like, is that okay for you, or is that too scary? For me, if I got $500, I'm willing to risk 25. That's that might be a little bit of gas money, but I promise you, your reward gonna be gas money for the week. You might risk a little bit of gas money for the day, but that's gas money for the week. Your reward will always be greater. So if I got a $500 account and I'm only risking $25, $24 to be exact, that's not going to kill me. I live to trade another day. And that's what some of us are not doing. Some of us are too busy trying to live to get rich, trade to get rich. We need to live to trade and learn another day. Because I see too many people's journey get cut short because of little mistakes. And most people who stop trading don't even know how to do what I just showed you. When people be like, yeah, trading don't work, blah, blah, blah. I'd be like, how do you count pips? Show me how to count pips. It's been so long. Like, bro, come on now. And you telling me this don't work? All right. Go ahead, Judy. You come mute yourself and ask your question.
Just 1 minute.
Mm-hmm.
I have a question.
Yes.
When you're doing this, yeah,
mm-hmm.
and I lose, for example, I lose the $24, the maximum risk for the day.
Mm-hmm.
The next day, do I do the risk management from minus 500 minus 24, or do I still use my initial $500? If I lose it,
you'll want to do what your account balance is, right?
With my current account balance.
Yeah.
Okay.
Because when it comes down to trading, the dollar does not matter. The percentage matters. The dollar does not matter. $2, $3, $4, $5. But if you keep a consistent 3 to 5% risk and then you catch a 10% gain, like a 20% gain, your reward percentages is, as long as they're bigger than that 3 to 5%, you're always going to make more money than what you're risking. So if you take a little loss on your account and your account is a little bit smaller, we probably should be risking a little bit smaller moving forward so that we will catch, when we do catch the gain is going to pay us back more. And we're not risking the same amount more money, to be able to lose more. Does that make sense?
Yes, it does a lot. Thank you.
No problem. And Lillian, go ahead. You could unmute yourself and let me know.
Oh, just a quick question. I'm a little bit lost on how do we get to the lot size of 0.8,
Okay. So
or rather 0.08.
okay. So it's a mathematical way that y'all can figure this out. I know it is. I like there's no way that there's not a simpler way to do this. And I'll figure it out for y'all. But right now I think I figured it out, but I don't remember how to do it right now. And I'm not gonna lie to y'all. When I first started doing this, I would test lot sizes, right? So after you take a couple of different trade ideas, you know, you risk 15 pips here, 20 pips there, you will start to get an idea of like what lot size you typically would use for your account size. But I'm sorry, y'all. Hold on.
Okay, no worries.
But oh my goodness. So let's just say, for example, right? You got that $500 account, right? You know you're risking 30 pips, so the 30 is always going to be relevant, right? So we do 30. Let's just say we want to test the lot size of a 0.02. That's 20 cents. 0.02, 20 cents. That's only $6. Our max risk is 15 to 25. So I'm risking too small. So I'll just add a couple of more numbers to the lot size and I'll test it out. And then when I get over 25, I'll realize, okay, I'm gonna go back. If I'm way below, then I'm gonna go up a little bit. So it's like a test type of thing, honestly speaking.
Oh, got it. Got it. Makes sense.
Yeah. So you just test, but
Okay.
there should be a mathematical way to figure this out. I'm not sure, but I would try. Y'all know how like you do the numbers and it's like, oh, what is X? I feel like this is the type of math equation for that. To be like, okay, what lot size do I use? That's X. I don't know. We go figure it out though. I got y'all. But yeah, just test it out. Don't overcomplicate it. Just try out a couple of different lot sizes, see what it adds up to, and you know, move on from there. But let me also add this in because I didn't explain it in this training. Okay. Yeah. So let me add that into it now. So if you're using, how do you determine the stops? How do you determine the stop loss in the currency pairs? Based off of your markup, based off of the harmonic scanner, based off of whatever strategy you're using to take the trade. You don't just put a stop loss wherever you want to put it. You put a stop loss based off of market structure. So let me give y'all an example. Let's run back through this real quick. For my more advanced people, if you don't understand what I'm like, don't you know, upset yourself if you don't get what I'm about to show you real quick. But if you buy in the market, I didn't mean to do that. If you're buying the market, right, you 9 times out of 10 are gonna buy in an uptrend, right? So let's just say we see the market here, right? And somewhere over here, the market did something like this to where this is like a point of interest area, right? A point of interest area, meaning I'm expecting for it, once the market gets up here, I'm expecting for it to come back here. This is where I'm going to enter my trade. Based off of market structure, if you're in an uptrend, you want your stop loss pretty much at that previous low. Because from there, you know, the market might come down here a little bit, but it should not go past this previous low. So this would be like a good safety point for your stop loss. So I hate when I see people like, oh, you know, I only want to risk 15 pips. The market don't care that you only want to risk 15 pips. The market is going to move within market structure. And your 15 pips might be right here. So you get stopped out, lose your 15 pips, and then it take off from there. So your stop loss should be based off of market structure and not just where you feel like it should be or where you want it to be. So when we call out most trade ideas in the traders den, you know, the harmonic scanner is always going to typically give it to you. But when you start taking trades on your own, you want to focus on market structure. Wow, Josh, that's an aha moment for me. And I'm glad because, you know, I see, you know, and that's why it's a lot of people that trade different ways. Me, I'm a market structure. What am I? I'm a logical person, right? I'm a logical person. If the market does not care about how much money I'm gonna lose, how much money I want to make, how much money I don't want to lose, so why would I focus on my pip count for my lots, for my stop loss? Why would I focus on my pip count for my take profit. No, I need to focus on zones of the market. Downtrends, uptrends, retest zones, pullback zones. And that's where my parameters need to be. You know what I'm saying? It's all based off of what the market is giving you and showing you. So now that we went over that, you guys, I got a complete example right here. So this is how we figure out our reward. And I'm going to draw this out with you guys. This is how we figure out our reward. This is now for our reward, right? Specifically, we want to focus on our entry and our take profits. That was ugly. I don't know how that happened. Our entry and our take profits. You don't do this at the same time. The entry is always, what's the word? The entry is not a variable. When I say a variable, when you're trying to figure out your risk and your reward, the entry does not change. You never not use the entry because that's your starting point. So if you're trying to figure out your stop loss, your entry is here to your stop loss. When you're trying to figure out your take profit, your entry is here to your take profit. So don't ever, I was training somebody and doing this with somebody, and they was like doing the numbers of TP1 to TP2. That's not showing you how much money you're gonna make from you entering the trade to TP2. That's just gonna show you the gap in between TP1 and TP2. So if you're trying to figure out your first take profit, you're gonna use your first take profit and the entry. Okay, that makes sense. So we have the numbers right here, right? Step number one, I think it was already done here. We delete the fifth digit, 1, 2, 3, 4, 5. Our new entry number becomes 1.0635, right? Then our TP1, you guys, y'all could just be texting the chat stuff. So when y'all be really reaching out to me about serious stuff and I don't get back to you, it's because the stuff that people text me, it could be just sent to the chat. But the 1.05580, we delete the fifth digit, 1, 2, 3, 4, 5. The 0 is gone. So now the new number for here is 1.0558, 1.0635. Step number one is complete. We now move on to step number two. Step number two. What was step number two? Somebody unmute themselves. Don't answer if you already answered before. Somebody new.
You eliminate the same numbers from the left.
Okay, so let me know which number, just give me one by one. Which numbers are we eliminating first?
1.
Okay, so we get rid of this one, we get rid of that one. 0.
And 0. Yeah.
And that's
the
it.
The other ones are different. Yeah.
Right? So now we're left with 558 from here, and we're left with 635 from here. Somebody unmute themselves and tell me step 3. It's right in front of you.
Get the difference.
Get the difference. Now we take these numbers and we subtract them. 635 subtracted by 558, bing, 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 70 pips. Now I already know these are the things that I already know. I do this from what we did already. I find my risk before I try to find my reward, right? When I know I'm safe, okay, cool, $24, I'm okay with losing that. I don't want to lose it, but I'm okay if I got to lose it to make some money. Right? I'm going to use a 0.08. My risk is $24, but now I just did to figure out what I would make for TP1. I now take my 77 pips. I take the lot size, the 0.08, which is 80 cents, and I multiply that, and that's going to let me know that my reward is $61. My reward is $61. So now I'm risking 24 to make 61. That's smart. That's more than a 1 to 2. That's bigger than a 1 to 2. Meaning I would have made about $48 if it was a 1 to 2. That's bigger than a 1 to 2. We making $61 from risking 24. Okay? So now, how many of you guys are ever confused on what lot size you use? Be honest in the chat. Drop a 1. If you ever been confused on like, okay, that's the biggest lot size I should use. It's giving me a $24 risk, but he called out the harmonic scanner trade, and it's 3 trade ideas. It's three goals. It's 3 targets. So do I use the same 0.08 for each one? The answer is no. That's gonna put you over 24. Never knew it had to be worked out. Nah, yeah, you want to figure this out because this is how you like take care of yourself. Like I said, the market don't care about you. The broker, they make money regardless, lose or win, right? They take commissions from the trade, but guess what? The brokers make even more money when you lose. So they like that too. They like, oh yeah, like you lose, cool, right? The brokers, the market makes money when you lose. Do we have time to do the math before we miss the trade? The best part about Sway Charts is it does the math for you now, right? So when you put in your entry and your stop loss, you will already know what you're risking. But you do have enough time. And if you ever get to the point to where you're looking at the harmonic scanner and it's moving too fast, you came late. You came late. The harmonic scanner is a tool that gives you trade ideas all throughout the week, all throughout the day, right? And when you see the trade ideas, like when I drop trades in the chat for y'all, they're not ready yet. Like you are lucky if you get to the harmonic scanner and it's just ready for you to get in now. Like it's not usually like that. It's like, okay, cool. This is what I'm waiting for. This is the confirmation that I want to see before I enter. So now if I take this trade, let me figure out what I will have to put in for my lot sizes and whatnot. So you'll do it before you do it, before you take it. It's never like, even when I drop it in the chat, you got time to do it because I usually, unless I say buy now, if I say potential sell idea awaiting confirmations, it's not ready for you to get in yet. So that's the time that you spend to figure out, okay, if this ever plays out, if it ever gives you the confirmations, this is what you would do. Okay? Does that make sense, you guys? It's always better to be safe than sorry. If you miss the trade, you miss the trade. At least you practice calculating your pips again. Right? It might not sound good, but you know how you get faster at doing it? You keep doing it, you keep practicing. Sometimes you're gonna miss a couple trades, but then you're gonna get so fast at figuring it out. Like me right now, mentally in my head, when I look at this, I already delete the fifth digit. I'm already realizing the 106 matches up, and I'm already figuring out, okay, what's 35 divided by 65? I mean, subtracted by 65. So I don't even have to write it out no more. When I see the numbers, I could mentally picture myself writing it out, doing it, and figuring it out. So when you practice it so much, it's going to come effortlessly for you. Okay, for me now, it comes effortless. I just look at the numbers, I figure out which ones match up, and I subtract in my head, or I use my calculator to do some quick subtraction, and then, all right, boom, it's a 40 pip lot size. 40 pip stop loss based off of my account size. When I got a 40 pip stop loss, I'm usually using this size lot size. Okay, boom. Then I'm gonna use this size lot size. You know what I'm saying? So you want to master it. Like I said, master this, and everything else is gonna come. But back to what I was saying, you guys, in terms of trades where there's 3 take profits, you take all 3. Why would you not? Why would you only take 1? Let me explain to you guys what I'm saying right now. Right? So when I call out a harmonic scanner trade, I grab my marker. I gotta start putting stuff back, man. I'll just use. Let me know if y'all can see this blue. Actually, I'm gonna give y'all a real harmonic scanner training. So when you're using a harmonic scanner, the green line is typically your entry, right? The red line is your stop loss. And then the blue lines are your take profits. You usually have 3. Well, you always have 3 every single time, right? 3. So if I'm entering this trade, here, right? And I'm going to do, right, what was the example? Our stop loss was risking $24, right? For our take profit, it was make 61. All right. Oh, let's do it. Let's do it, though. I'm going to do it with y'all before. before I keep going. All right, let's go back to the computer real quick, and then we're gonna finish up. So to look at this again, let me know if y'all can see the same screen again. Drop one in the chat if y'all can see it. Can y'all see where the pips and the trade idea is? Okay, so now let's do this with the second one. So second one, we do our entry in our TP2. So let me draw again so I don't lose anybody. Now we got our TP1. We're making $61. Now we want to figure out our TP2, right? So we do our last number, right? 1, 2, 3, 4, 5. We delete the 6. 1, 2, 3, 4, 5. We delete the 0. That's step 1. Now we're left with this. Then we go to step 2. We delete the like numbers. 1, 0, 1, 0. 5 and 6 are different. So we got 635, 530. All right. Take profit 2 is 105 pips. Okay. So let's just act like, let's do it like this. 105 pips. So what was how many pips was TP1? Does anybody remember?
77.
77? Okay. Thank you. So 77 pips for TP1. What was our stop loss? How many pips? Nobody know? 30.
Yeah.
It was 30. So
95.
30 pips.
30, right? 30 pips, right? So TP1, 77 pips. Stop loss, 30 pips. Now, what I want you guys to, and then TP2 was one what? 105?
Yes.
105 pips. So the example that I just said is, okay, the biggest lot size we can use is a 0.08, which is 80 cents. I gotta find this marker. This is really upsetting me. It's right in front of me. Wow. All right. So the biggest lot size we can use is a 0.08, which is in dollar form, 80 cents, right? So with that, I would take this trade one time because that's the most I can lose. That means this stop loss will give me negative 24. If I hit my take profit, I'm going to make 61. But let's think about it. Why would I take this trade one time when there's multiple goals that I can make? There's more money that I can make. There's more money to be made, right? Now, do I know that it's going to hit TP3? No. But if I'm going to risk $24, I'd rather make as much as I possibly can anyways. So how do you do this, right? There's 3 targets. To reach each target, how many times do you got to take the trade? 3 times. You got to enter 3 times, right? Entry 1, entry 2, entry 3. Entry 1 can hit TP1. Entry 2 hits TP2. Entry 3 hits TP3. Right? So I got to take this trade 3 times. If this is the biggest lot size I can use, guess what I do? I divide that by 3. So I could take it 3 times. Okay? So let's look at it. 80 cents. We divide that by 3. So that's 26 cents. You can't do 26 cents 3 times because you can only do 20 cents because let me show y'all what I'm saying. All right? To take the trade, 20 cents in dollar form is a 0.02. That's the smallest you can do is a 0.01. You can't add 6 cents to that. So what you would do is to make that 80 cents, right? How can we do it? You take the trade for a 0.02, right? You have, okay, so you'll take one trade, I'll do TP1, right? TP2. So if I'm getting in this trade, right, I'm going to take it 3 times. How do I get, I'm sorry, y'all. I'm trying to give this to y'all in the clearest way. I know what I'm trying to say, but I want it to be clear for y'all. So I need to take this 3 times. I can't do pennies. So I have to keep it in tens, increments of tens. So to get to 80 with 3 trade ideas, I can do 2 trades for a 0.03 and 1 trade for a 0.02. Right? What does that give us? A 0.08. A 0.08. Now, what's the logical way to do this? I'm going to do my TP1 for a 0.03. Why? Because I know for a fact at least TP1 should get hit. TP1 should hit for a fact. TP2, I'm going to do a 0.02. And TP3, because I want to make the most money at the end of the day, I'm going to do a 0.03. Okay? So with this, we took this trade 3 times, but yet we're still only risking $24. We're still only risking $24. If each one hits our stop loss, we're only going to lose $24. But for TP1, if it hit our target, right? Let's do our math. 30 cents times 77 pips. We made off of TP1 $23.10. Right? And we only risked 30 cents times 30 pips. We only risked $9 to make $23.10 on this specific trade. $9 to make $23.10. Then it went for the other entry. We took them all at the same time. The second one is a 0.02 for 105 pips. We do a 0.02, which is 20 cents times 105 pips. I made $21 on this one, right? Granted, I made more money here, but once, I'm just keep going. This one, trade number 3, it hits TP3. Let's just guess. Let's just say somebody give me a number higher than 105. How many pips does this look like? How many pips does that look like? I don't know. Let's just give me a number.
120.
160.
I like 160 better. That sounds good. Let's do 160 pips. Nothing against you, boss, but 160 sound lovely. So TP3 hits. We did a 0.03. So we do our 30 cent times our 160. We made $48 here. So now I took 3 trade ideas. I still only risked 24. But how much money did I make? 23.10 plus 21 plus 48. I made $92.10. $92.10 by risking 24 pips. Does that make sense to y'all? Please don't tell me I lost y'all. This diagram look good to me. Does that make sense? Drop MS in the chat if that makes sense.
Makes a lot of sense, Josh.
Perfect. Thank you for talking to me. Right? So now what we're doing is being smarter traders. Because if I would have only took this trade one time for a 0.08, right? That's 80 cents times the 30 pips. We was going to lose 24 if we lost. Then I took my 80 cents and my TP1 was 77 pips. I was only going to make $61. If I only took this trade one time and put a big 0.08, I was only going to make 61. That's cool and all. But why not put yourself in a position to make more? If I'm going to risk $24 regardless, why not make more? And the best part about it, right? When you're taking the trades and the market goes from your entry, right? Let me show y'all something real quick. When you're taking the trades, you said that's genius. Y'all see, and that's why I be telling y'all, I'm so confident when I tell y'all we win more than we lose every time. Everybody else just be buying, just throwing in any lot size. If you got this down pack, I don't care if your strategy is 30% accurate, you still probably gonna make more money at the end of the day. So let's just say you get in here, right? You get in here and the market goes up, boom, 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 TP1 hit. TP1 hit. You made off of that first one $23.10. Guess what you do now? you change your stop loss and you put it at your entry. Right? So now, guess what? If the market comes down after TP1, you break even with $23.10 on every other trade. You can't lose money now. You made $23 free, and now you're for free. No more risk. You are looking to make 21 and 48 risk free. So now let's just say the market did go down just a little bit, but it didn't hit our stop loss, and it kept going up, and it hit TP2. Now, what do? You erase your stop loss. You go in Sway charts, you edit and you modify it, and you now put your stop loss. I put it in between. I want it in between, right? My TP1 and my TP2. Because usually the space here is a little bit smaller than what the space was between this and that, right? So the space is a little bit smaller. So now after it hits TP2, I made $21 and $23. What's that? 54, no, 20, 40, 40, 45, 44.10. This 21 extra was risk-free. Now, if the market goes back from here, I'm gonna make another, what? That was a 0.03. So I was gonna make, y'all get it. I don't gotta do the math. If this goes back, I'm still making more than what I even made before. And I'm winning again. Still making money. I'm either gonna win or win. And hopefully it goes up and it hits all three targets. But after the first target, you're not even risking money anymore. You're not even risking money anymore. All right, y'all. Does that make sense? Drop a mess in the chat if it makes sense. And then when you trade like this, you don't need to trade as much. You don't have to trade as much. There's people who be taking 30, 40, 50 trades a day. And I'd be like, God, leave. And then they still be asking for more signals, more trade ideas. You don't need more trade ideas. All you need is 2-3 good setups a week. How many trades should you take on average? It's based off of your goal, right? So if I personally trade 4 days throughout the week, right? My weekly goal is 30%. If I'm trading 4 days throughout the week, that means every day I'm looking to make 7.5%. So my goal every day in those 4 days is to just reach my 7.5%. If I reach my 3 to 5% risk before I can make my 7.5%, I'm done. I stop trading that day. I stop. If I take a trade and I make 2-3% and it didn't hit all three take profits and I made some money, I'm gonna risk even lighter to try to then go make my 7.5%. So when you using a harmonic scanner and you take 3 trades, you already took 3 trades off of one setup. That's why I'm very, very bougie with the trades that I drop, especially for y'all. Right? How many pips below the market should you move your stop loss? I don't focus on that. I focus on targets, right? I focus on zones. Yo, TP1, when a harmonic scanner calls out TP1, it's there for a reason. When they call out TP2, it's there for a reason. So when I'm moving my stop loss up, I just move it from zone to zone. TP1 hit, move it up to entry. TP2 hit, move it up to TP1, or maybe even a little bit more if I want to make a little bit more money. There's no specific pip count. It's like a zone. So I want y'all to get out of the counting the pips for your stop losses and stuff like that, because the market doesn't care. I know, okay, boom, TP1 hit. This is a zone in the market. The reason why TP1 was put here. So if we're in an uptrend, it shouldn't come back down. And if it does, it's retesting. It's probably going to go back up. So I keep it right there. Right. So it's all just personal preference, honestly. So I would say just stick to zone. And then, if you get to the point where you like, all right, cool, like I'm noticing a trend of getting stopped out because I'm putting it up there, then you can even move it in between the entry and TP1 for your TP2 target, depending on, what it looked like. But it's like no specific number. But yeah, So when you're taking the harmonic scanner trades, it's three trade opportunities every setup. So if you take one and you know you made some money or you did good, if you close to that 7.5%, you like, why risk it? Why risk it? Like, Josh, yeah, I made money, but I was like $5, $6, $10 away from my 7.5%. You up for the day. Like, why get back in the market and try to risk your 3 to 5% all over again and pull from the money that you made? Sometimes we just gotta be cool with just building up. All right, building up. Just come back another day, look for new setups, the best setups. And then there's days where I only trade 2 days throughout the week. That is okay too. I know some people, they be like, it's always an opportunity in the market, but I'm not always in the market. So, you know, I can't catch every opportunity. So when I'm looking at the market and I'm looking and I'm seeing what I see, if I don't see a good entry, I'm not getting in anything. I'm not forcing anything, you know? Does that make sense to you guys? You know, in the chat, does that make sense? How long have we been on here? About an hour and 12 minutes. All right, this coming to an end. I got one slide. So in conclusion, right, this trade idea, the one that we did here, not what I just showed y'all here, but what we did, right, originally, there was only two TPs, TP1 and TP2. So for us to take this trade 2 times, instead of doing a complete 0.08, we did 2.04s. So that's what I did there. So we did a 0.04, that's 40 cents, 105 pips, we was gonna make 42 off of TP2. So in conclusion, with a max risk of a $500 account, it's $15 to $25. I risked 30 pips total. My max risk for both entries is a 0.04 lot size for both entries, which is totaling out to 40 cents per trade. My TP1 gave me $30.80. My TP2 gave me $42. I still risked $24 total, and my reward was $82.80, opposed to you just taking the trade one time and only making 61 off of TP1. And you don't want to just skip over TPs either sometimes. Like if you got a small account and you know TP1 isn't gonna pay out good, like it's like a 1-to-1 between the stop loss, then go for TP2. But you don't want to skip it over, right? Unless it just don't make sense. Sometimes the harmonic scanner will give a trade idea and the stop loss will be 50 pips, TP1 will be 35, and then TP2 will be 60 something. I'd be like, I'm gonna go for TP1 and TP2 and TP3, and I'll take 2 trade ideas, right? So, or 2 trades. So the account balance, this is the focus. You get your account balance, you find your 3 to 5%, you calculate the pips being risk, you find out what lot size is safe to use, then you multiply the dollar amount by the pips that are being risked, and that's how you figure out your risk to reward. Okay? So that's the training, you guys. This video is recorded on YouTube, so I will be dropping the YouTube link in the Traders Den chat for you guys to be able to go back, study it, watch it, learn it. And if you got any questions, use the community chat. Go ask questions. Let other people who understand answer your questions, because I'm not always going to be available. You know, it might take a little bit longer for me to get back to you. So for more so immediate responses, it still may even be me sometimes. You know, just go to the chat so everybody can see the question, everybody can be helped. But if you gain value from this call, before we close it out, just go ahead and drop some fire emojis in the chat. You're very much welcome, Caroline. All of you guys, you're very much welcome. I'm glad you guys learned something. No doubt. No doubt. Love you guys. So Carnisha is doing an opportunity call in 15 minutes where she's going to be explaining the business. So if you guys have any friends, family members, or guests that you want to invite to check out everything that we do, you feel free to invite them to that call that starts in 15 minutes. And I love you guys. I'll see you guys on the next call. And also, I'm going to challenge y'all. With the next trade ideas that get called out, I want y'all to do the math, right? Do it on paper and take pictures of it and drop it in the chat. Let's start that so everybody could see, like, okay, everybody doing it, she doing it, I'm doing it. Y'all can look at each other's screenshots. If somebody is wrong, you can help them out. Like, let's start to do that, right? That'll be a great way for all of us to practice together and learn together, you guys. But I appreciate you guys. I'm glad you guys were able to learn.